I want you to stop celebrating right now. I see the comments. I see the screenshots of your portfolios. I see the euphoria. You see a green candle on a chart and you think you have won the lottery. You think the war is over because silver finally broke $30 or $50. I am here to tell you that the war has not even started. You are looking at profit. I am looking at a trap. A trap so sophisticated, so mathematically precise, that it is designed to strip you of your wealth exactly when you feel the most invincible. Do you really think the bullion banks who have controlled this market for 50 years are just going to roll over and hand you their money? Do you think JP Morgan and Citi are going to write you a check for your retirement out of the goodness of their hearts? No, they do not want to stop the price of silver from rising. In fact, right now, they want it to rise. They need it to rise. Why? Because they need your liquidity. They need your greed to exit their own bad positions. They need a frenzy of retail buying so they can sell into it. The higher the price goes, the more dangerous the game becomes. If you do not have a battle plan written in ink right now, you are going to be a casualty of the volatility that is coming. You are going to be the person who buys at the top and sells at the bottom. In this briefing, I am going to show you exactly how the banks plan to wash you out of the market before the real move happens. I am going to explain the psychology of the fake-out and why your own brain is about to become your worst enemy. And I am going to give you the exact mathematical formula for exiting your position so you walk away with generational wealth, instead of a bag of regrets. This is not financial advice. This is a survival guide for the financial violence of 2026. Let's get to work. The mechanism the algorithms hunt. To survive what is coming, you have to understand who you are fighting. You are not fighting a human trader in a pit in Chicago anymore. You are not fighting a guy named Bob who is shouting orders on a floor. You are fighting an algorithm, a high-frequency trading bot that operates in nanoseconds. It operates faster than you can blink. And this bot has one directive, one single mission: find the liquidity. Where is the liquidity? It is sitting right where you put your stop loss. Let me explain the washout strategy that is going to hit the market when silver touches key psychological levels like $50 or $75. You and millions of other retail investors act in predictable patterns. You are herd animals. You buy the breakout because you feel safe. And to protect yourself, you place a stop-loss order 5% below the price. You think you are being prudent. You think you are managing risk. But the algorithm sees that order. It sees the entire order book. It sees a cluster of millions of ounces of sell orders sitting at exactly the same price level. So what does the bank do? They do not wait for the price to drop naturally. They force it. They use a technique called spoofing. This is not a conspiracy theory. This is a criminal practice that JP Morgan paid nearly $1 billion in fines for doing. Here is how it works on the Level 2 data screens. They flood the order book with massive sell orders, millions of ounces, so they have no intention of executing. They layer these orders just above the current price to create a wall of supply. To the market, it looks like a massive whale is about to dump. This creates panic. The buying dries up. Then they aggressively sell a small amount of real silver to trigger the slide. This creates the illusion of a crash. The price plummets. It drops 5% in 30 seconds. It slices through support levels like a hot knife through butter. It hits your stop loss. Your broker automatically sells your silver to protect you. You are out. You are safe. Or so you think. But guess who is on the other side buying your silver? The same bank that triggered the drop. They are scooping up your stop-loss orders. They stole your position. They took your silver at a discount. And then, 10 minutes later, they remove the fake sell orders, the spoof orders disappear, and the price rockets back up to new highs. You are left sitting on the sidelines with cash, watching the train leave the station without you. You try to buy back in, but the price is now higher than where you sold. You hesitate. You wait for a dip. The dip never comes. This is called a stop run. And as we approach $100, these stop runs will become violent. We are talking about $10 swings in a single hour. We are talking about volatility that will make Bitcoin look stable. If you are trading with leverage, you will be wiped out. If you are using tight stop losses, you will be shaken out. The only way to defeat the algorithm is to remove your stop loss and reduce your leverage to zero. You must hold the physical asset or an unleveraged position that cannot be liquidated by a flash crash. They can manipulate the paper price for a minute or an hour. But they cannot force you to sell a physical bar of silver that is sitting in your safe. That is your edge. Do not give it away to a bot. The psychology anatomy of a mania. Now, let's talk about the enemy within. The algorithm is dangerous, but your own dopamine system is lethal. One have been in this market for 30 years. I have seen smart men, doctors, engineers, lawyers lose everything because they could not control their emotions during a mania. We are about to enter a phase of irrational exuberance. This is the phase where logic leaves the building and emotion takes the wheel. I want to map out exactly how you are going to feel so you can recognize it and neutralize it. Stage 1, relief. This is where we are now. Silver breaks the suppression. You feel validated. You feel smart. You tell your spouse, "I told you so." This is healthy. Stage 2, euphoria. This happens when silver breaks its all-time high of $50. Suddenly, you are making more money in a day than you make in a month at your job. You look at your screen and you see numbers you never thought possible. You start checking the price on your phone every 5 minutes. At dinner, in the bathroom, while driving. You start doing mental math. If it goes to 200, I can buy the Ferrari. I can quit my job. I can buy that beach house. Your brain is flooded with dopamine. It is the same chemical hit that a gambler gets when he hits the jackpot. You feel like a genius. You feel invincible. You start to believe that the price can only go up. This is the danger zone. Because when you feel invincible, you stop calculating risk. You start thinking, why shouldn't I take out a home equity loan and buy more? Why shouldn't I use margin to double my profits? I'm leaving money on the table if I don't leverage up. This is the exact moment the trap snaps shut. This is when the smart money is selling to you. Stage 3, the shoeshine boy indicator. This is the final signal. It is legendary on Wall Street for a reason. In 1929, Joe Kennedy sold his stocks because his shoeshine boy gave him a stock tip. He realized that if the shoeshine boy is buying, there is nobody left to buy. You will know we are at the top when people who have never mentioned silver suddenly ask you how to buy it. When your Uber driver gives you a tip on a silver mining stock. When the beauty vloggers on YouTube start talking about stacking. When your relatives who laughed at you for 10 years suddenly call you asking for advice. When the mainstream crowd arrives, the party is over. They are the exit liquidity for the whales. If you are buying when the taxi driver is buying, you are the sucker at the table. You need to train yourself to do the hardest thing in investing, to be fearful when others are greedy, to sell when everyone else is buying. When you feel like you cannot lose, that is the signal to sell. When your friends are calling you a genius, that is the signal to exit. You have to kill your ego to save your portfolio. The tactic, the exit protocol. So, how do we execute this? How do we bypass our own broken psychology? We do not use feelings. We use math. We use a rigid, pre-written protocol called scaling out. You must write this plan down today while you are sober and follow it when you are drunk on greed. You are not going to sell everything at the top. Let me repeat that. You are not going to sell at the top. Nobody catches the exact top except liars. If you try to time the absolute peak, you will miss it. Ride the crash all the way down, and sell at the bottom out of panic. Instead, we are going to sell into strength. We are going to feed the ducks while they are quacking. Here is the 20-20-20 rule. Write this down. Target 1. The break-even. Let's say your average cost basis is $25. When silver hits $75, you have tripled your money. At this point, you sell 20% of your stack. Why? Because you have now recovered a significant portion of your initial capital. You are now playing with house money. The psychological weight is gone. If the price goes to zero tomorrow, you have not lost your life savings. This gives you the mental clarity to hold the rest for the moonshot without sweating every dip. Target 2. The life changer. When silver hits triple digits, $100, you sell another 20%. You take this cash and you do something real with it. You pay off high-interest debt. You pay off your mortgage. You pay off your car. You secure your freedom. You transform paper profits into a debt-free life. Oh, that is a win that no market crash can take away from you. Target 3. The ratio play. For the remaining 60% of your stack, we do not look at the dollar price. Dollars are trash. We do not want dollars. We look at the gold to silver ratio. This is the ratio that tells us how many ounces of silver it takes to buy 1 ounce of gold. Currently, it is around 80. Historically, in a bull market, it crashes down to 15. When 15 ounces of silver can buy 1 ounce of gold, you swap. You trade the volatile speculative asset silver for the stable, permanent asset gold. Or you trade it for income-producing land. You do not sell for cash. You rotate assets. You move from the fast lane to the slow lane. This strategy ensures that you profit on the way up. You secure your lifestyle, and you preserve your wealth for the long term. It removes the question, should I sell? You just look at the number. If it hits the number, you execute the order. No emotion, no hesitation. Like a machine. The warning, the history of the rug pull. Some of you are thinking, but what if it goes to $1,000? I don't want to sell too early. This time is different. Let me tell you a story about 1980 and 2011. History does not repeat, but it rhymes. And the rhyme is always a tragedy for the retail investor. In 1980, the Hunt brothers, Nelson and William, tried to corner the silver market. They bought everything, physical, futures, everything. Price went exponential, from $6 to $50. Everyone thought it was going to infinity. Do you know what happened? The exchange changed the rules. The COMEX board of directors held an emergency meeting. Many of these directors held short positions. They were losing money. So they issued Silver Rule 7. They said, from now on, you can only sell contracts. You cannot buy new ones. Buying was banned. Liquidation only. Imagine that, a market where you are only allowed to sell. The buyers vanished instantly. The price crashed 50% in 4 days. People who bought on margin were bankrupted instantly. The Hunt brothers were ruined. In 2011, it happened again. Silver hit $49. It looked like it was going to break 50 and go to 100. Then, on a Sunday night massacre when the markets were thin, the CME Group raised margin requirements. They raised them not once, but 5 times in 2 weeks. They made it more expensive to hold a position. If you held a contract, you suddenly had to deposit thousands of dollars more in cash, or they would sell your position. The small players didn't have the cash. They were forced to liquidate. The price crashed from 50 to 30 in days. Do not think they won't do it again. If silver threatens the stability of the banking system, they will change the rules. They will raise margins. They will halt trading. They will force settle contracts in cash. They will invoke force majeure. This is why you cannot hold on forever, waiting for a magical number. You are playing in their casino. When the house starts losing, they close the table. You must take your chips off the table while the cashier is still open. This is why we scale out. We take profits before the rule change. We take profits before the margin hike. We leave the last 10% of the profit for the next guy, because that last 10% carries 90% of the risk. Do not be the hero. Be the survivor. The final verdict. We are approaching the most dangerous wealth transfer in history. Yes, it is an opportunity. It is the opportunity of a lifetime, but it is also a minefield. The price of silver is going to move in ways that defy logic. It will drop 20% in an hour and then rise 30% the next day. It is designed to break you. It is designed to make you panic sell at the bottom and panic buy at the top. Do not let them win. The person who wins this game is not the one who buys the lowest or sells the highest. The person who wins is the one who transfers purchasing power from a dying currency into a living asset and keeps it. Remember this phrase: paper profits are a fantasy until you realize them. You can be a millionaire on the screen and a pauper the next day if you do not click the sell button. Do not let greed turn a life-changing victory into a tragic story of what could have been. Have a plan. Stick to the plan. And when the crowd loses its mind, you keep yours. Now, you know how to survive the crash. You know how to exit the trap. But once you have sold your silver and you are sitting on a pile of cash or gold, what do you do next? How do you turn that windfall into a dynasty that lasts for generations? There is a roadmap for that too. It is called the Asset Rotation Map. In the next video, I am going to show you the 3 specific assets you need to buy immediately after the silver squeeze ends. These are the assets that the ultra-wealthy buy when the blood is in the streets. Click here to watch that video now. Stay disciplined. Stay sharp. I will see you on the battlefield.